So welcome back to Freedom in Hours. Andy here again. Great to have you back with us today. So today we're going to be looking at when will real estate prices bottom. You see, the last couple of years, real estate prices, when COVID happened, fell. And when COVID happened, after COVID, with the stimulus happening, they shot up. House prices in Sydney alone went up over 30% last year. And in regional areas went up around 48% in some areas. It's absolutely crazy. And now we see a lot of risk in the marketplace. Interest rates are going down, we're potentially in a recession, and there's a lot of headwinds coming across to property. So in this video, we're going to talk about where we think property prices will fall to. We'll also talk about where there may be opportunities for you in the future. We'll kind of talk about where we got to where we are today as well with real estate and what you should be looking out for. You see, we also did another video, how far will property prices fall? And my subscribers said, Andy, can you please let us know where you think it will fall to? So to be honest, we see a fall around 15 or 20% across major markets such as Sydney. Sydney may even fall further. Regional areas probably not as much. In places like Brisbane will be okay. We'll also talk about other areas. For example, we lived in London where it was £1 million for a one-bedroom apartment near where I used to live. I mean, it's crazy. But anyway, we'll jump into that look shortly. So make sure you like the video, subscribe. Let also other people know about Freedom in Hours. As again, we're really here to help your financial literacy, help you achieve better and more out of your life. Anyway, let's jump in now and look at when real estate prices bottom here at Freedom in Hours. Okay, so why are we so concerned with real estate prices at the moment? Well, you see, over the last few years, real estate prices have been on a bit of a roller coaster. Now, when COVID happened, they did fall, and then the government decided to do a new round of stimulus by basically printing money and quantitative easing. This included reducing interest rates down to, in Australia, 0.05%, and it's quite similar throughout the developed world. In effect, what you could do is you could buy property and get rental income, and it'd be a lot cheaper than the marketplace. So essentially, the government was giving you money to be able to invest. Not only real estate went up, but also stocks went up and cryptocurrencies went up. Now, we've done a lot of videos about cryptocurrency, about how it's not worth any money, which you can see here. But the net effect is it pushed up all asset prices. Now, if you look at real estate prices over the long term, they do generally go up over time, but they do go up and down in different waves and swings. Now, a lot of people say to you, real estate never goes down. Well, in effect, it does, and it has before. So, number one, don't fall for the old saying that real estate prices always go up. They don't. Now, Sydney and Australia experienced around a 30% increase last year. Now, it's just come a 2% decrease in the last month. It's the largest drop in many years, almost on record. And the fear now coming is what goes up can also come down. You see, guys, there's no free lunch in this world. You can't sit there and expect to buy anything and it go up over time. Sydney house prices went up to $1.6 million. At one stage, someone could just sit there, buy a house in Sydney and be making $1,100 a day. $1,100 a day for real estate without adding any value. It's absolutely mad. Now prices looking coming down. See, interest rates have started to rise. They're going to keep on rising for the foreseeable future to get inflation under control. Asset prices are tied to interest rates. The reason being is that interest rates go higher, it gets more expensive for people to borrow, to be able to invest, pay back their homes. So, the last couple of years in Australia, people took the lower interest rates, they refinanced their homes, they went and bought stuff outside, they went and bought new stuff, took holidays, also refinanced their house higher. A lot of people bought as well, assuming that interest rates, property prices always go up. But the net effect is with interest rates going higher, the cost of borrowing goes up. You see, if you've even got a small mortgage of say $500,000, every 0.5% increase in the mortgage rate increases your interest rate payback by a few $100s. A lot of people took out these loans when they were already at the margin. They were already loaned to whatever the bank could afford them. So, the stress test is that people don't have much more money to be able to pay for things. What happens when real estate prices actually start to go down is that it's a decrease in wealth effect of the economy. So what happens is people see their value in a house decreasing, they stop spending as much. Retailers then don't have as many profits. They start to lay off workers. Workers don't have jobs, so they can't afford it. They can't afford their mortgages, and it becomes this cycle that goes round and round and round. It's happened many times before. It will happen again. And my fear at the moment, see in Australia it's 3.2% unemployment rate, yet we're staring at a recession. These kind of things haven't happened before. And it's because the Federal Reserve and the RBA in Australia distorted the interest rates. They kept interest rates down far too low for far too long. Had the net effect of creating this wealth that didn't actually exist. It really is bad. The net effect was people having a party and free money. You see, I don't believe that we should be listening to people out there in the media to tell you when property prices are going to go down. But it just takes evaluation. So going back to the Sydney price, $1.6 million for an average place in Sydney. You own $86,000. It's going to take you 20 years to pay that place off. It's absolutely mind-boggling. I mean, why would you pay so much for a place? It's just beyond me. Regional areas in Australia, house prices went up by 39%. Why are you paying 39% more than what you were a year ago? I mean, what are these people doing thinking to buy a house that was, say, worth $500,000 and they're now paying $900,000 for it? Don't they think there's something strange about that? Well, not really. If you think about it, it's gambling. If you go look at my other video, why people gamble instead of investing, it really is obvious that it releases the dopamine factor in people's minds. And to be honest, us as human beings, we live our life basically on autopilot as well. We take on information, we try and interpret it, but the reality is we don't really know what we're doing most of the time. It's pretty sad actually, but that's why these videos and resources are there to help you become smarter, to become more focused, become more switched on, so you can make decisions about what you want. Now, London, for example. So I lived in an area in London. I think unit prices used to be around £300,000 for one bedroom apartment. Down Elephant Castle, South London, they were selling one bedroom apartments for £1 million. Now that's 2 million Australian dollars. Guys, that's mind-boggling. I mean, why would you spend so much? And you have to realise with property prices as well, if you're not getting a higher rental yield, you've also got all the costs. You've got rent units, body corporate prices, mortgage fees, rentals, the cost to get in there. It's not cheap. So you need to be really thinking and doing your research about what you're going to purchase. But, you know, the real estate market's gone frothy. It's going to drop. I'm looking at around a 15 to 20% drop, probably the city markets. From $1.6 million, they'll probably bring it down to around, $1.3 million. $1.3 million, maybe $1.2 to $1.3 million, which I see as potentially being fair value. In places like Brisbane, Australia, probably not going to drop as much. The reason being is, and that's one thing about these property prices too, there is high rental demand at the moment. So rentals have gone up around 15% the price of rentals. The Australian government chooses to keep on bringing in a heap of immigration. So, we brought in, I think, 1 million people over the last few years. That's going to keep on going up, which will put a floor under property prices. So there are going to be opportunities in the future. But for the short term, interest rates going up, affordability going down, people's perception, people's feelings about the future, it's going to cause property prices to start to decrease. So it's not a good time to be purchasing property. Back in the past, you'd go into regional areas to buy good properties, but even them went up. And it's the same across the whole world. So in the UK, property prices have gone up massively. America, property prices have gone up massively. And it's all through printing money. So, again, we're all here for financial intelligence. We are big believers in property. I own dozens of different properties throughout the world. And very, very passionate about it. It creates a good income for me. But a lot of things I do with properties, I actually add value. So I look for properties maybe that are run down, that need a bit of work. I go in there and build the property up, get some tenants in there, get some higher rents, and high on for the capital yield and also the rental yield. But I don't buy property in the hopes that it's going to go up. And on the point of property going up, I've had friends who've gone and bought property and said to me, Andy, property price is shooting up. I'm going to go and buy it now. It's a great chance to make money. I could put down, under 95% loan rate for $1 million place. I could put down $50,000. I could sit there and watch a capital soar. Goes up 20%. $1.2 million, I've just made 4 times my money, from $50,000 to $200,000. Well, guys, as I said to them, yes, that's great if property is going up, but we are at an all-time property market high. It's been going up for many, many years. Interest rates are about to go up. Don't buy it. Now, unfortunately, these same guys, with property prices dropping just 2%, it's dropped from $1 million, for example, in this case, to $980,000. The bank's already turned around and gone to them, now you need to put more money into the property to be able to service a mortgage. You had a 95% loan to value ratio on the property, you now need to top up money. And that's a fear. Whenever I buy a property, I always make sure that I use a good amount of leverage that gives me a buffer in case things may happen. And a lot of people haven't done that. So, in this video, I don't want you to be frightened that real estate prices are going to bottom around 15 to 20% more. I want you to have hope, because as long as you were smart when you purchased it, you bought in a good area, you bought in a place that people want, or if you've got a home as well. If you're buying for your home, you can afford to pay it back, don't worry. But if you're at the edge and you don't have money, check out our other videos about how to make money as well. So just because you're working at a job doesn't mean you can't start making side income, doesn't mean you can't start setting up websites, doesn't mean you can't start selling your skills online to be able to make extra money. You see. We're the greatest opportunity in history to be able to make money and create an income and create financial independence. And the great thing is, even if you're working a job at the moment, you can quite easily earn an extra 2 to 3 grand a month through online businesses, which can pay for it. My actual online businesses pay for the mortgages of my real estate, which means that I keep on buying more real estate then and keep the process going on. It really is exciting. But anyway, going back to it, I see stock prices, real estate prices, and cryptocurrencies are going to fall over the next several months, up to a year. Cryptocurrency will continue to fall. I don't think it's an investment at all. Stock market prices, they'll dip slightly. They still are, even though they got up to an all-time high. As long as they can hold corporate earnings, there will still be value there. Real estate prices over long term will continue to rise. But we've seen a 34 to 40% increase in the last couple of years. Generally, they increase at 6% per year ongoing. So we've literally seen a 7-year increase in just over a year. So hot off the market at the moment. Be careful. Rents will go up. So hopefully rents will go up and interest rates will stabilize, and that'll be a good chance to go back into the property market. But property prices will bottom around 15 to 20% by now on average, and that's across the Western world. Obviously, there's regional differences. Be careful. Do your own financial education. Make sure you're aware of what you're doing, and be smart about things. But I hope you enjoyed the video. Again, make sure you also check out the video, How Far Will Property Prices Fall? We talk a bit more about it. But yeah, from current prices, around a 15 to 20% bottom. They've gone down 2% Sydney the last month. That kind of reflected across the Western world as well. It will drop. How far it goes, maybe 15, maybe 20%. But when it gets down that level, if it happens a couple of years' time, I'm going to start buying again. So anyway, thanks for joining us here at Freedom in Hours.